Yeah, I'm still bullish about precious metals. And while certainly the thesis to the upside hasn't played out, the damage that was done to portfolios in precious metals was certainly less extreme than the damage that was done in other sectors, which is to say, at the very least, it treated you less badly than other sectors had. Charlotte, the arithmetic around precious metals, particularly physical precious metals, I think continues to be very attractive. Precious metals have done well for a millennia during periods of time when people were concerned about the maintenance of purchasing power in their conventionally denominated savings assets. And as we talked about last year, there is nothing that makes people more nervous than having the interest rate that they're paid on their savings be less than the rate of inflation, which is to say, having their bonds guarantee them a loss of purchasing power. I have to say, I'm very impressed with the strength of the economy. I would have expected that the increases in interest rates that we've seen would have had more of an impact on the economy. The 30-year fixed mortgage rate, as an example, in the United States has more than doubled, and it has impacted real estate prices. My own expectation is that the impact of higher interest rates is likely a lagging indicator, which is to say that the impact of decreasing availability and affordability of credit will impact the economy at some point in time. But I do need to say that I'm impressed with the strength of the economy. I'm impressed with the ability of the Fed to raise interest rates. I'm impressed with the decreases in inflation that we have seen as a consequence of increased interest rates. And I need to say that so far, the policy has worked and worked on many levels. I don't approve of it because I don't think that the government should involve themselves in artificially manipulating interest rates. But I do need to say that I'm impressed with the resilience of the economy. I'm impressed with the market's seeming willingness to accommodate higher interest rates. And when I look at capital markets worldwide, but particularly in the United States and Canada, I am struck by the incredible amounts of cash on the sideline. If the Fed has the continued ability to raise interest rates without an immediate deleterious impact on the economy, I think that you may see, at least temporarily, a melt up as opposed to a melt down in capital markets, simply because there is so much cash on the sidelines. I believe, Charlotte, and I hope your listeners bear this contradiction in mind. In circumstances like this, in the near term, many investors and every government confuses liquidity, the fact that we have cash, with solvency, the ability to maintain our lifestyle and the ability to maintain our balance sheet over the long term. We have lots of liquidity right now. It's our solvency that concerns me.
This is going to sound harsh, but war doesn't matter much to gold, I don't think. It matters to people on the ground. What matters to gold buyers is the perception of maintaining the purchasing power of their savings. What investors are really concerned about is the debasement of currency, of the purchasing power of their currency in excess of the interest that they're earning on their savings. And in that circumstance, the factors propelling gold are better now, worse for society, than they were at that point in time. We've been through this before, not in your lifetime, but certainly in mine. In 1969, 1970, 1971, all of the indicators of inflation were in place. But people had lived through 20 benign years, and so they still had confidence. We've lived now through 40 benign years in the period 1982 to 2022, so people are confident, despite the fact that they understand intellectually that they're losing purchasing power. It hasn't bit them yet. When it does, they'll be concerned. I understand two businesses. I understand natural resources, which is to say, the gamut, timber, oil and gas, mining, and I understand financial services. So I confine myself personally to those businesses I understand. Most of my investments are in conventional financial services or in natural resources. The idea that someone would confine all of their investments to one area, unless they knew that area extremely well, better than I ever have, is pretty silly. The truth is that I believe that people for the longer term need to be invested in things like very high quality US dividend paying stocks. I believe that people, particularly now, do need to be invested in precious metals and also in natural resources. But the truth is, to the extent that somebody had all of their portfolio invested in gold, unless they knew an awful lot more about gold than I do, which I think is unlikely, they probably shouldn't do that.
I think the Fed will continue to raise interest rates to the extent that they can get away with it. I think the Fed is interested in the mythology, the narrative of fighting inflation. I think what the Fed needs to do from a policy perspective is get interest rates high enough that they can cut them if they need to. It's very difficult to effectively cut rates below zero. And I think that Powell is familiar with that. I think on balance, although I don't believe in the existence of the Fed, I think Powell's doing a reasonably good job with the constraints under which he operates. And I hope that there's enough economic strength that although it's against my own interest, I think it's in the country's interest to see interest rates higher.